Peace and blessings, everybody. Peace and blessings. Welcome to the Sauce Factory Wednesday. All right, today we're going to be going over charting futures markets using Fibonacci retracements and a slew of other tactics to kind of plot out your week, get you prepped up and ready to go in the futures market. So just like any other market, we starting off with crude oil, but first and foremost, make your watch list. I have mine labeled futures market, as you can see here, right? And then from here, these are my tickers I love to trade. And these others, tickers I just kind of keep track of. So we're just going to go through this list, bust them all down, top down analysis, and we're going to kick it like that. All right. Let's get rid of this. Come on. All right. So from here, I like to start with the weekly time frame. Typically in a futures market, unless you have an account where you want to swing trade, you're most likely scalping or day trading. So you don't need a lot of space or a lot of information to go over, but you do want to have some form of information, like an idea what's the overall trend and the sentiment of the market. Think about commodities. The difference between commodities and indices like the NASDAQ 100, the S&P 500, commodities is not dictated by companies public traded on the stock exchange, right? It's dictated by the demand of the product. So crude oil is a demand product worldwide. So the world market must agree on this product and a price set. So they have weekly meetings. So the price will be dictated by the weekly OPEC meeting when they release how many barrels they're going to produce or how many barrels they're not going to produce to project where they want price to go. Understanding those key things can help you gauge the direction of the trend of the market by knowing that information. Now, outside of that, if you don't want to do that deep dive fundamental research, you can always come to the chart and get it how you live. The answers are always in the charts. You just got to get it how you live. All right. So don't be scared of it. Now, simple basic charting techniques. We're going to find 3 points of contact, support, and resistance, and we're just going to mark it off like that, right? Oh, all right. Let me switch this up because this is not my support. Boom. All right. And then from there, I want to just keep going until I box in price. See, like, all right, price hit here, but that ain't it. Just like anything else, find resistance. Let's scroll to the left. Okay, ain't really see nothing there. That's a high point. So we got resistance. So this is our zone of prices trading with crude oil until the moment they decide to take price up higher. Right now, we're in this tight little range. So we're going to see, because what happened, price went down, then it's pulling back. So at the current moment, it looked like it's going to project back down to take out this low, but we're going to see a price do that said thing and return back to the support. So first, let's check the retracement on this level here. So we're going to go from the high to the low because price is currently heading down. So we're going to follow the trend. You start at the high to the low because price is retracement, right? This is why they call it retracement, because price is going to come up from the zero back to this level, and they're going to determine the pullback, right? All right, let's get this little line out. Cool. So price came started here, ended here. This the pivot. Remember this. Your pivot point is where your zero line goes. So when price started this trend, your pivot stopped. Your zero goes at the pivot. This is the pivot. This is our retracement. We did a 78% retracement on this trend. As you see the previous week, we've been closing below the previous week highs, right? So you look at it, over a 3-week period. I'm just going to clone this. Come here, buddy. We've been closing lower. So that means price is slowly falling again. So, you know, if you're coming back into a downtrend, because same thing happened over here, right? This was our retracement to our pivot. Price did what? 65% retracement, almost a 78% retracement, right? So let's change. We're going to change this retracement to another layout because I'm fancy like that. I'm going to say a wave 2. Boom. Get that out the way. So as you see, Once price made it said retracement, price went down to the 23% level and found support. But at the same time, let's try it again. Price returned back to the 61% level because it is said weekly order block. Mm-hmm. Since price going below, this is a sell block here, right? Remember, if price is below the block, it's for rejections to sales. If price above the block, that's rejections to buy, right? So when price come down, like in here, I'm sure there's an order block in here on the lower time frame because all this consolidation, price will reject and go up to a certain key area in price on the chart, and then it will reject and go back down. So it'll do this little ping pong effect so it can achieve its price goals. So always keep that in mind. But this right here, 3 candlestick order block continuation, right? When you charting these out, you want to mark out the high and the low of this said wick and watch how price interact with that. See how price return? Now it's slowly starting to reject out of here. Since it's a weekly chart, it takes a little bit more time for you to turn this around. This is a cruise ship trying to turn on a dime. It's going to take a while. Just keep that in mind, right? These fib levels, they act as support and resistance. Remember that. They are calculated support and resistance. So each one, if it do a 61% retracement, that is an extreme discount. That is 60% off of the premium price, which was down here at 67.64. So when they pull it back up here, they saying, hey, this is a fair price for us to take it down. So not only that we're going to make money on the upside move, that's why we drove it up there. Now on the downside move, we're going to sell it at a premium or sell it at a discount because they're in a premium zone now to discount price again, right? Because when you want to buy low, where it's low. 60, 67%. Now you want to flip this to kind of go around the other way so you can see like, hey, what would be that deal? So you start here at this pivot point because price came down to us, right? I dragged it over there to that high. See this high pivot? It came down to almost an 88% retracement. So technically, from an uptrend perspective, price is 88% off, right? Keeping that in mind. If you was taking it from a downtrend and say it's bearish, and you're bearish on this, well, price went 60% off. So you don't want to, as a seller, you don't want to sell down here. Why is that? Because people are ready to buy down here. When things go bad, don't go with them. All right. So you see they've been aggressively selling off a market. You got to start thinking, where is the max level of pain? Where is they going to start turning the market around and ready to start rallying and buying it back up? So to help you with that, that's why we enlist the help of these oscillators, a MACD and a RSI, right? Looking at price in the RSI and the MACD, it was already telling you momentum was shifting. So as you see, grab this. Looking at the histograms, you see how momentum is slowly shifting upwards, even though this was consolidation, right? Price was here in his little box. Come on. Price inside this box. So that's what we're paying attention to, right? As price stays inside this box, look at your oscillator slowly creeping up towards the neutral zone, ready to change their mind and let them, let you know something, right? But as you keep your eye on this, you slowly see price also creeping up on the chart. Is not doing it like aggressively, but just watch it, how price is steady building momentum, and you at a discount. But if you are an aggressive seller in one set direction, that you keep your mind fixated on one direction, this is how you get smoked out by overplaying yourself. The market been going down. You say the market going to go down again the next week. Well, guess what? That's where you're extremely wrong at. People get their head lopped off all the time because they do not pay attention to the trends, right? When you see prices staying in one spot and you say, what is the likelihood of this? Well, it's already 88% off from this said trend that started back here, right? Way back on the May 1st. From here to here, it's 88% off. I don't think they're going to go no lower. They got to pick it up at some moment and rebalance price that they left behind, right? Revisit some levels, discount again, and then drop back down. So it's discounted for the bulls, overpriced for the bears. Okay. For you a bear, this is high premium. You don't want to sell. You don't want to sell in high premium. You want to sell at high discount. This is a great discount for the bulls because it's all the way 80% off. That's almost free. Why not buy free, right? Who don't like cheap buys? I know I do, right? So look at this back in, like I mentioned before. See that cluster price? Look where they returned to. Right here at this cluster, bounced it and went right back up into this said order block. Now, will they break this? We don't know. We got to see how this week close out. They already put in an up candle. They already took out the low of the previous week, like they did here before. And that's when I'm going to get into the other form of trading, well, charting per se, right? Now, this is a little simple trick I like to do to kind of keep track of price. So I will mark out the weekly high and the weekly low of the previous week. Okay. From there, that automatically tells me where is the range expanding to, right? Because you're looking for a range expansion. You're looking for growth in your direction of choice. If you would have did it 3 weeks ago, right? Because this the current we on this current week. So they say would have started here, right? Boom. Boom. That tell you when the moment they took that low, price is breaking down. So we just need to watch it, see how it's going to develop. Then 9, 10, hey, they never took the high, but they took the low. Price is driving low, right? Let's say we flip it, right? Come down here. Boom. They took the high, never took the low. Same thing here. They never took the low. They took the high. Took the high. It's progress. The moment they stop making progress, this is a simple idea that lets you know, like, hey, they no longer making progress in this direction. Maybe they changing directions. Grab a fib, measure it out, see where you're currently at in that said trend, and be open-minded to simply say, hey, are they going to flip this direction or not? Or are they holding this direction or not, right? So let's line it up with the current week. Because you saying it's still a bull trend, well, guess what? You'll be thinking like this. You'll say, well, this is my pivot point. Let me run my fib to here. Oh, wait, it's at a 23% discount. All right, cool. They may bounce it here. It's 23% retracement. They may bounce it here or not. If they bounce it at the 23, that's a weak retracement. That's not strong enough. It's not a good enough discount. That means a lot of bulls are not going to be in there for long. If they are, it's short lived. They're probably going to play it to one key level and get the heck out of Dodge. Anytime you start getting 23% retracements or 38% retracements, 9 to 10, the move is fully extended and they ready to leave. Okay? I'm going to show you that. So watch this. We're going to hit the replay real quick, and I'm going to show you how this week ended out for that previous candle, right? Because that's what we're going to focus on, is when they start topping out price, right? We're going to say, what is the deal here? What was happening? We're going to show you the reversal. Now, we're going to drop down to a 1-hour chart. Okay. Now you look at it, right? From this pivot point to this pivot point, we're going to run our fib. What was the retracement? That's going to be the key. Boom. They did a 50% retracement, right? Okay, cool. But where did they go? They only went to the negative 27, then tanked. That wasn't good enough, right? So you look at it. All right, if I move my pivot from here, to here, you'll see like, oh, it's because, a lot of consolidation. Nothing strong. They kept bouncing and bouncing it, right? But we're going to be watching our oscillators now. Watch what they are doing. According to my MACD, we haven't reached this peak. We setting up a bearish divergence. So you look at that, right? Price going up, momentum going down. Sun is off here, right? You see it's bouncing up, but it's doing it jankily, right? It's not really jankily, ain't a word. I made it up. So from the south, take it how it is. All right. Look. So as price consolidating, bouncing up, that's why you're getting all these crazy wicks, these little wicks. All right. They wicking all over the place because momentum is leaving out. It's not coming in. So we watching this, right? So you can even go from this pivot high to here. Notice price never got back up to this level. The max it got up to was 65, right? as you see price bottoming out, coming back, making fake returns, that's telling you momentum is not there. It's a setup, right? So you pay attention to these things. Okay. You pay attention to that. That would let you know price was setting up. The moment it curled over, you already knew what time it was. Smoke them if you got them, all right? Then from there, I'm gonna leave this one up. Rod, what candle is that, Rod? What candle is that? Come on, Rod, don't let me down. It's your favorite one.
Baby, that's my pinball right there. Shooting star.
Oh, just like that. Butter. Right? So on the higher time frames, on the 1 hour, you're gonna be looking for setups. You know, hey, MACD is telling me price is setting up a bearish divergence. Okay, price is acting funny. My hour candle just done something real funny. Set it up a pin bar, shooting star, right? So I already know. Enter the trade, smoke them out. Take them for everything they're worth, right? Like a bad divorce. You taking them. Give me what you got for a poke chop, all right? Mm-hmm. And we're gonna be targeting lows. Because you know that's what they like to return back to, right? Mm-hmm. Boom, boom. They done an internal break, not even running for an external break, but that is straight price dropping. So you looking for setups like that on your higher time frames, and when price really start maxing out, is letting you know what time it is. Now, nothing you could do, you go back to your 4 hour chart and look at the same thing, like what is the price doing? What is momentum doing, right? And if you look at it, momentum been slowly falling off the last couple of weeks. Well, okay, last couple of days, you see it? Like momentum has slowly been on a creep. It's been on a decline. Even though they was running it up, you don't ever fall for it, you know. That's why you in the chart you trust. They was running price up, and if you stayed in that momentum side of like, hey, the bulls got it, the bulls got it, the bulls got it, you get your head lobbed off, right? But that's what we have to pay attention to. And at that point of the week, that was the highest form of price. That's what price hit the highest at, right? After that, it just fell off and never got itself back together. So let's clean this back up. Okay. And then want to go back to full charts, back live. But that's how you recognize those said patterns. That's why we go to the 1 hour chart. It breaks it down for you and let you know what time it is. Now, coming over here real quick, I just spotted this out. Boom. 2 candlestick rejection block. That's where we're currently at, right? Boom. All right, we off of replay. So this is current price action. Market open. You see what I say? I ain't even have to say what it gonna do. It did it already. Come on now. In your face. Kobe. Yeah. Yeah. You see that rejection? Come on now. It gapped down. It's ugly. It just boop, fell out the sky. She slid, jumped off the charcuterie board on this one. All right, that's all I'm saying. Now we do have a 4 hour fair value gap we currently landed into. So let's see how price react to that over the next couple hours. Right. So let's drop down to the 1 hour chart and see can we minimize this block. So there's our order block with the gap. That's a strong combination. Remember, three order block continuation. So that is a very strong zone. Then on top of that, you have multiple fair value gaps here, right? You have a little small, teeny one right here, and then you got this one right here. So in theory, a lot of times they'll land in a zone like this. You got two of them back to back. They'll probably land like right here on the cuff. They love coming in right at that cuff of that one. That's my personal experience. That's why I noticed when you have two of them back to back, I always like to let them get close as possible and see where they hold support. So before I take the reversal, if it's just one fair value got with an order block, I feel way stronger than taking a reversal and getting high lift. Okay. But as you see, they got into the rejection block. Let's turn this thing red. Like I told you on the 4 hour chart, you recognize those said things. When as soon as you seen price get in there, you already knew what time it was. Like, the head in there is a high possibility they gonna reverse. And sure enough, in your face today, they reversed from that 4 hour rejection block. That's simple, right? Now, just because it did it once, you have to be leery about the second time. The first time is the strongest. The second time, you might want to be a little iffy. That's when you start getting set up. The more times they visit those zones, the weaker they become. Eventually, they break through and keep on going, right? Because they got to, create liquidation. They can't make it too easy for you. Remember that. All right. So that is CL. Typically, I will probably go down to a 12-minute chart to kind of zone in and see what else I can find on that smaller time frame, or you know, to use a 15 too as well. Once I find those key levels, like matter of fact, let's do that. I use a 12, so we're gonna go to a 12. Let's get rid of the oscillators. We don't need those. Also, here's another little trick. This 4-hour. Okay, great. So this block, I want it on this time frame and above because it's a higher time frame block, right? So I want that to go away only on a 4-hour. Boom. Now this is a 1 hour is great. That's fine with me. Now we're gonna go down to a lower time frame, and I will be eliminating blocks. Depends on what time frame they make the most sense on. If they don't make sense on certain time frames, they will go. Okay, that's the way you keep your clutter down. So we can go back to the 1 hour chart, and we'll say, hey, this box don't make sense. So we're gonna go ahead and hide this one too. This front time frame and above, right? So when we come down, we have less clutter. That's another technique you can use to keep your charts a little more cleaner, right? So from here, we can start noticing we have this gap. Boom, boom, boom. They fell straight through that for a reason, right? Then we had this nice little volume imbalance. You had like a lot of small price action movement, but there's a volume imbalance right here, which is tiny, but it is there. Boom, boom, boom. Okay. Ultra zoom. So you see, Wick, we went over this in last week class. So you didn't see it, go back and watch the previous video from last week. We went over volume imbalances. So here you go. Now we got to check if they're going to drive it back up from here. We got to see where we currently at. So this most recent pivot point, we could use it here, but they also pivoted here because they did find support. I'm gonna run it up. I'm gonna switch this so we can see it better. Everyday use. As you look at it on the dollar, 61% retracement. Great. So price is currently 61% off. From there, we can determine, are they going to drive it up to fill this gap? It's a high possibility they will, right? Or they're going to get partial gap and then they may fall back to the downside. We got to look at the news and see what's going on with crude oil to determine, is this they play or they plan on doing something else, right? But that's one of those economical things you got to get into. Okay. So outside of that tip, we're going to keep on pushing. We're going over to gold now. See, gold is also a world commodity, right? Gold is real money. That's the world's money. Gold and silver, right? Those two are not tied to a country, so their price is agreed upon by the world. Everybody in the world must agree to this price, not us, not this country, not that country, not whoever. The world must agree, say, hey, gold is worth this, silver is worth this. That's the reason why it's the only real money. It's the only real. The other stuff, that paper stuff, foo, fake. If you need it, it's foo, fee, whatever. It's crap, right? So this is the reason why we also buy gold and silver. Because no matter how weak the dollar get, your gold gonna stay the same. You know, it's agreed upon price, right? So it falls in the same category as crude oil. It's not affected by stocks, not affected by CEOs and people and their bad habits or whatever. It's affected by supply and demand. Do we need it right now? Yes. Do we, or we don't need it? Whatever. They're gonna dip or they're gonna go up. One of the two. All right, but you look at it. Go back to a weekly standpoint. We kind of spent a lot of time on that crude oil. We're gonna have to make this one quick. Gold is in the uptrend. We put on our moving averages. That's 255.21, right, for long-term uses. you'll see gold is in a nice uptrend. They had a moment of consolidation for a while. Now they're breaking out of consolidation, making new highs. It had some news drop yesterday for gold. So that's another reason why they're pushing up. But we're going to keep this move. Now, if I'm scalping gold, I'm keeping it straight up like this, right? Nothing fancy. I don't need all the other stuff. It's nice to have it, but it is what it is. So I'm going to straight up find my range, right? I'm going to find my weekly range. Uh-oh. Get out of my way. Get. All right. Boom. Weekly low. No, wrong one. Weekly high. Boom. Weekly low. All right, cool. So gold already took the high out, right? Good deal. So now I can minimize that to get it out of my way. They took the high, so we know they're going bullish. Now I'm gonna drop down to a 1-hour chart and start looking for setups. I'm looking for order blocks, because gold love is order blocks. So I'm gonna look for those, like here. Boom. I know they come back here. They're gonna want to buy something. They're gonna buy something. Then we got another block right here, right? So this is a strong zone because the simple fact that if they can take this counter completely out and flip it, 9-10, they're going to do something else when they get down here. So what I'm paying attention to is breaker structure. We had an internal breaker structure. I'm looking for an external break either here or here, one of those levels, right? Boom. And then we turn around because we had a what? A little fair value gap on a 1-hour chart. So I'm going to mark that up real quick. I ain't got about it. I'm a perfectionist, so sometimes I like to have it like right on the money, but you can have just get in the ballpark. It'll be okay. You don't have to be so anal about it like I am, but it is what it is. So hit this fair value gap to start reacting today, right? Keep your eye on this candle. So let's go down to a lower time frame, like a 12-minute chart. And now we're going to start looking for other obstacles that price would love to go take out. Okay, let's cool. Boom, let's run a fib from the high down to the low. So currently we made a 23% retracement in the Asian market. All this price happened at 2 o'clock of the New York. They came up here, got jammed up. I can see why with that large imbalance. Now price is hovering at the 23. Now here's the thing about the 23, right? And any other fib level. They act as support and resistance. So now the 23% is acting as support because one moment it was holding them back. Now it's helping them. They won, price won over the 23% retracement. Say, hey, I got you. You can stay here. Let me hold you up. Right. Typically, I like to see a 50% retracement. If I'm going to think price going to reject and go down, I want to see them level retracements. But if gold is truly bullish, well, guess what? 9 out of 10, we may be pushing past this. So we're just going to keep our eye on it. Now, this is Wednesday price action, right? We're just looking for the last couple of days, what's been happening with gold. A way to keep track of that is simple. Let's go back up to a 1-hour chart, and I'm gonna show you some quick little tidbits. So this is current high. This is Wednesday, right? Come on, price. Okay, great. Dragged it over there. Thing in my way. Come on, mouse. Stop tripping. Okay, Wednesday high. Great. We're going to mark that up. Now I'm looking for Tuesday high. 19 is right there. Okay, so they already took. So apparently we took Tuesday high out. So that was a liquidity sweep. Boop. Now we're looking for Tuesday low. So that's today, Wednesday. So we still got a low here. So that's current low. Boom. And I'm marking these things for a set reason, right? I want to know what's the low and the high of each day range, right? So this is Tuesday low way down here. I mean, they made one heck of a run, right? That was one heck of a run to get up to that level. Now, where's Monday at? Well, let's figure that out, right? So there's Monday. Nah, that's all Tuesday. Tuesday. So here we go. This Monday high. Boom. It's going to start telling the story in a minute. Just watch me. Watch me. I said, watch me. I got it. Okay, where that Monday at? Boom. So this Monday low. Okay. Now, reason why I do this, it's a little tedious. I know it, but it helps you keep track of weekly progress and let you know, like, hey, what the week is doing, right? So you would say, all right, this the Monday range, market close. What is gonna do? All right, cool. Run your fib to the high and the low. Price came down. All right, it made a 50% retracement. Now price is pushing back up. So now what I like to target is my negative 27, my negative 61. You can use those as targets. So the moment price break out, you see it breaking out. You want to wait for a pullback, retest at any key level. Great. Take your trade and let it ride. Or say, well, once it breaks out of here, let me take a trade, figure out what's my entry going to be, take it and let it ride, right? But you can do this every single day. You can say, well, that's the new low. Let me move this. You can be lazy like I am, right? I can be like, y'all move this field up. I ain't gonna even draw a new one. I'm gonna need to do it like this. Boop. Now, remember I told y'all about those 28s and 23s and 38% retracements, how to be fugazi? Gold is a prime example. See, all it did was a barely a 38, 23, 38 retracement, went up, sweet, and took cheese off your cracker. Boom. Right out there. Boom. Slid right off onto the floor. There you go. That's the part I'll be talking about. Anytime they do something like this, we're going to be a real trend. They're going to really push it. Well, since they made new highs, guess what? Now they got to make some lows. They got to reset. They got to redo price. Ooh, look what I found. Nice little order block. Ooh, come on now. Talk to me nice. All right, cool. So now we got a sell block going on right now, 3 order block continuation. Let's see if they're going to reject out of here the next couple hours or will they hold and keep going up? Gold is in a bullish market right now, so we're going to see what they do. But at the moment, as you see, they dropped price down to the 50%, found a fair value gap on a 1 hour time frame, and now they're trying to use that to react to it because I know they're going to want to rebalance this. But will they make a new high? They're going to be determined. But as you see from the range that we currently have, right? Well, price is heading in a uptrend. This Monday low, Monday high. They went dip down into Tuesday, and then from there they did a range expansion, right? From Monday high to a new high. Okay. But we had 2 days of up movement. Guess what happened on today? It was a reversal, right? So from there, they gave it to us. Boom. Wednesday was the reversal day. They did a pump and dump. They pumped it up, took the highs, swept, cheese slid off the crack. It was over. Okay. Now, where I was at this morning, I was watching it. Do. I was over here in the wood forest. Okay. I came, seen it. Boom. They made a little, they dropped it slowly though this time. As soon as they popped up, 38% retracement on 12-minute chart, dropped down, start playing around. I was somewhere in this ballpark. When I took my trade, where was I at? Matter of fact, I was actually earlier than this. I was like 6 o'clock, something like that. Yeah, I was way over here. That's right. Yeah, it was about 7 o'clock my time, so 8 o'clock. Yeah, I was way over here trading this. So when they done all of this, right? When they came down, they said, okay, cool. We hit our little move. I'm like, great. They ain't do nothing. Take them for everything they're worth, right? So I'm trading in this little bubble. This is what I was telling you about earlier, Rod, when I said they hit the 23% and they just went off. They hit my break even. But right here, when they hit that number, that's why I said they went off. Yeah. Yeah, they got something serious. That's why I was like, well, thank goodness I know how to move my stop loss in the profit because they would have smoked me. Because my stop loss is up here, right above this candle. They would have got me. It was like, yeah, it was up there. They would have cleaned my clock, and I would have just been sitting there crying. So yeah, that's just why you don't get greedy. Don't fall asleep at the wheel. Just take some profit. Be all right. They'll play you like this. Because as you see, They did a internal breaker structure, went back, did a little trick, right? Boop, boop. This all in the Asian market, right? For them to come to the New York, right? Once they got to the New York, they slowly start creep. They ran it up, swept the highs. So before the New York, this is your pump. Then they hit you with the dump. All right. What was the tails? Look at the MACD. What they got for you? It's on a creep. It's on its TLC. It's creeping. Sharp turn. RSI. Sharp turn. Boom. Dumping, coach. It's over. Simple. All right. Now let's get out to this NQ real quick. SOS ain't nothing special. We're gonna do the same thing. We're gonna just run to the weekly, down to the 1 hour, down to the 12. Mark what we got. Ooh, well, I like how this is looking up. See? All right, real quick. What pattern is this? Who got this pattern? Somebody tell me. What pattern is this?
Even star.
Thank you, Rod. That's what I'm talking about. Let's go. I wish I had one of them little clapping things. I need to get my graphics up. I know somebody else got this, whatever. Oh, wait, I can do this. No, I've been waiting to do this. Correct answer. Congratulations. Gifts for everybody. Yeah, there we go. This moment of foolishness. I've been waiting to use that feature for a while now. Thank you. All right, so right now, we got 1 day left. Yep. So we got 1 day left. This pattern is not set in stone, but it's pretty heavy, like it's gonna close. It's set in stone, right? That's the thing. The moment that counter close, they're gonna let us know, like, hey, no, it's a legit even star. We are bearish on the NQ at a high. You already know what time that is. It's smoked salmon time. Yeah. Trick or treat, baby. Lit. Know it. Out of here. Bam. Get the cramping away. All right. So you seen how I took out the low, because it ain't making progress no more. It's gone. Ain't no love here. All right. So now we're looking at possible reversal points where you can find support, anything like that. So we got a fair value gap right over here. Bada boom, bada bang. Oh, they landing that thing perfect too. See that? Boom. Now they reacting. So from there, I want to know, this is my pivot point, right? This is my last rejection zone here. So I want to run it to here and possibly see off the 1 hour where they're going to retrace to. You got all this imbalanced price right up in here, right? Price needs to be, all this needs to be rebalanced. And we got a, whatchamacallit, 3-order block continuation. So they can possibly draw a price back up here, but this is the NASDAQ. It can go higher. What? Nah. How many days is that? That'll be 13 days, right? 13 days. Let's see. What my handy name thing at? I know you talking about from here there. 4 days. Don't qualify. 13 days for any cup and handle. 13 days minimum. That's the rules. I'll make it up. I follow. Yeah. So I'll be looking for a retracement. Get it how we live, right? From there, they're already inside of a gap and it's reacting. So we're going to see where they're going to come back to. We got an order block at the 50% retracement. So we have another Y. They could possibly tank there. But it is the NASDAQ. If NVIDIA decide to, catch some legs and run off on the plug, who knows what we may get. So, yeah. And on that note, do we have any questions? We're about to close. We're running out of time. Nope. All right. So that's that. Went over 3 different charts. I like to run my technicals. Oh, we can also drop down to the 12-minute real quick. So we're gonna look at this consolidation real quick. And also this kind of like, I just like to look for candles that I can possibly see targets, right? When we in a range, you have targets. So when price start retracing back, you have targets where you can scalp to from point A to point B. I'm looking for those extreme points in price so I know where I should go and what's worth my while. So here, since we at a discount, let me put my moving average, and we starting to pick up, well, guess what? I know from here to the least right below the 50%, that's 700 ticks, right? The NASDAQ can do that in one day, but if it's low volume or there's nothing going on, it may take a while because it can move 400 ticks in a minute with the right amount of news. So it can possibly do this in one day, maybe 2 days. Depends on how long you feel like taking. So if I decide to go long, well, it's worth a while. Now, let's say it don't do that and it comes here. That's still 200 ticks to the 55 EMA. And the 200 EMA is up here at 1100 ticks, but it got to get past 55 first to get there. So you always keep that in mind as you plot. Okay. So on that, that's that. Boom. All right. Let me do this number. And then we're going to do